Hello, good morning, good afternoon, good evening. My name is Junwoo Lim, and today I'll be presenting my final investment review for this course. Over the past 8 weeks, I've managed a simulated portfolio of $50,000 to see how theoretical concepts actually perform in a live market environment. My main objective was to evaluate the gap between what we learn in textbooks and the actual outcomes we see in the real world. And today, I want to walk you through my strategy, the tactical decisions I made, and the lessons I learned after seeing a total ROI of minus 3.11%. So, the initial strategy and asset allocation. I started on January 5th with what I called a core satellite structure. I put 60% of my budget into SPY to mirror broad market stability. Then I allocated 30% to high growth tech stocks, Microsoft and Tesla, to capture some aggressive upside. Finally, I kept 10% in XLP, a defensive consumer staples ETF, to act as a shock absorber for the tech volatility. My rationale was simple. I wanted to use modern portfolio theory to diversify my risk while still targeting a 6% return. I was trying to avoid making emotional choices by following a systematic process from the start. By February 9th, my portfolio was down about 1.17%. What was interesting was the divergence. While Microsoft was struggling, my defensive XLP position had actually risen by over 13%. And by seeing this, I decided to make a tactical move on February 15th. I sold more than half of my profitable XLP shares to buy more Microsoft. At the time, Microsoft had reported strong earnings, but the price was dipping. So I assumed I was buying the dip to lower my average cost basis. I shifted from a conservative stance to a more active management approach, thinking a price recovery was right around the corner. Now, if you look at the chart on the slide, you can see the reality of that decision. My portfolio value hit its peak in week one at over $50,531, but it struggled to maintain that momentum. After my tactical shift in week 6, the value actually dropped further, ending at $48,445 by February 17th. This resulted in a total ROI of minus 3.11%. So when you compare this to the S&P 500 benchmark, which only dropped 0.71%, it is clear I underperformed. So I realized that increasing my tech concentration happened exactly when macro uncertainty was at its highest, proving how difficult market timing really is. This brings me to my first major takeaway, the expectations market. As I mentioned, Microsoft reported positive earnings, yet the stock price kept failing. This paradox is well explained by Park's theory. I learned that stock prices aren't just about historical health, they are driven by future expectations. Because of semi-strong form efficiency, the good news was already processed by the market, and my entry was simply too late. I was too focused on hard numbers and neglected the fact that high expectations were already baked into the price. The second lesson was the vital role of defensive buffers. Early in the project, that 10% allocation to XLP was my only survival tool. It validated the idea that holding assets that don't all crash at the same time is essential for capital preservation. When I sold my boring defensive buffer to chase a growth asset, I essentially removed my own safety nets. And I've learned that diversification isn't just a textbook theory for optimizing returns. It is actually a systemic way to manage my own psychological risk during periods of high market noises. To conclude, this course has completely changed my management philosophy. I've transitioned from intuitive stock picking to a much more data driven framework. I now understand that short term ROI is a poor metric for judging a long term strategy. And for my future savings and retirement, I'm committing to staying in the course rather than panic trading during temporary swings. My priority will be maintaining target risk levels through rebalancing rather than making emotional reactions to market dips. Effective management requires as much psychological discipline as it does financial analysis. So this was end of my presentation, and thank you so much for listening.